Renaissance Asset Managers is a specialist emerging and frontier markets investment manager with a focus on Central and Eastern Europe, Africa and Central Asia. Renaissance Asset Managers has assets under management of $2.8 billion across a full range of asset classes. Sven Richter, Managing Director of Frontier Markets, joins us in studio to chat about their investment strategy. And I want to focus on the Frontier Markets Fund tonight, because I think that's going to throw forward to some interesting conversation given the very dire situation emanating out of Europe. If you look at your frontier markets, now 28% of your fund is Indonesia.
Yes.
Something that doesn't get much attention on our news desk, certainly. So tell me why the stance, such a heavy exposure.
Heavy stance to Indonesia. Okay. Firstly, I mean, in terms of both frontier markets and emerging markets, we believe that these markets are well positioned for the future. When we look at them, we see very little debt in terms of at a macro level or at a stock level. We see good valuations, and we also see that about 8% of institutional investors' money across the world is in emerging markets and frontier markets. But emerging and frontier markets make up about 30% of the world indices. So we think that there's a long-term flow towards these markets, and these markets will grow. Investors' money will move to them, especially as they need to see growth, because GDP growth across these markets is about 6%, whereas across the markets in Europe it's sort of 1.5%, 2%. So we see tremendous opportunities there. Why Indonesia specifically? In terms of our Frontier Markets Fund, we focused on what we think are 10 of the fastest growing and most interesting frontier markets in the world.
So this is almost your 10 best ideas.
This is our 10 best ideas. And each one of those markets has got substantial population, so they can grow themselves. It has natural resources, it has a good education base, and it's growing, and they're growing GDP of above 4 to 5% a year, and we believe that they'll do that for the next decade. And Indonesia is one of the ones that stacks up very importantly, with more than 200 million people in Indonesia.
Just for South African viewers, why, for your 10 best frontier ideas, why does South Africa not make the cut?
South Africa is too large as an emerging market, and it's not a frontier market. That's why. I mean, we in general, we're not biased against South Africa anyway. We like South Africa. If I was running an emerging markets fund as part of this, we would be invested in South Africa, and we would have quite a large weighting here. So there's nothing against South Africa. Just South Africa is too developed to make a frontier market cut.
But you do have some African countries here. Nigeria is your second biggest holding. Egypt, you've got significant exposure. Kenya, and then at the lower end, Togo at 2.5%.
Yes, I mean, Togo is really just an opportunistic purchase. What's more interesting for us, and which will be in our fund for long, is things like Nigeria and Kenya, which are really earlier stage frontier markets, growing very fast, with the challenges that frontier markets have in terms of liquidity and access to information, but with huge potential growth, and Egypt as well. And I know Egypt is also going through some turmoil at the moment.
But it's on a lot of fund managers' radar screen. Egypt is coming across as a good investment story across the board.
It is. Look, we do have to be a bit careful, and you must look at the volatility. You know, in January, Egypt went up by 45% in US dollar terms. Since then, it's given back most of it. It's now about 10% up for the year. But if you look sort of longer term, Egypt's got the population, it's got raw materials, and we believe that once...
How many people in Egypt, just remind me?
I think it's about 45, 50 million.
45, 50 million.
Something like that, or a little bit more than that. So it's definitely more than the 35, which was our cutoff. At the moment, it's going through some turmoil, but we think that once it settles down with a democratic government, the government will be more receptive, will push towards more growth, and we'll see a lot of growth coming from Egypt and a lot of benefit for the companies that are in Egypt.
Just talking about turmoil, and Egypt included, but the whole spectrum of countries that you look at, how do you price or value political risk? And is it something that's obviously got to be a factor? And do you more look at direction towards democracy or away from democracy? How do you go about pricing all of that?
Well, our sort of sister company, Renaissance Capital, has done quite a lot of studies in terms of democracies and how established they are and GDP per capita. And they have found that the higher your GDP per capita, the very, very unlikely that a country slides back away from democracy. So as countries tend to develop, they tend to become more democratic, and as more democracy comes into a country, they tend to develop more. So we would like to see companies or countries moving towards democracy. In terms of political risk, it's a very difficult thing to factor in. What we want to see to a certain extent is certainty and movement towards democracy. We know that you're going to get some surprises, but You know, political risk can be very strange in many different countries. I mean, what about political risk in Europe at this point in time? You've had governments falling, you have huge debt, you have huge pressures on all these governments, even sort of Germany, France, the UK are under huge pressure. And when anyone, and especially politicians, are under huge pressure, you never know what all the decisions will be. When you have less debt and less pressure, you usually find the decisions can be longer term and people can think out them more closely, and you don't have so many sort of decisions.
So relatively speaking right now, Africa looks like a land of milk and honey compared to what we're seeing in Europe.
It does, and all our clients are phoning us. We spoke to them all last year about investing in Africa. They were all very interested, but they were just a bit scared. This year, we've just seen a flood of money coming into Africa.
Your benchmark, what do you benchmark against?
Okay, in terms of our sub-Saharan fund, it's the MSCI Africa excluding South Africa and excluding Egypt, so it's MSCI Sub-Saharan Africa. For our for our frontier fund, we've used the MSCI indices from each country and we've summed them up together, or the MSCI has done it for us.
The interesting element here is your consumer story is a big focus for the fund, and you are significantly overweight, almost double compared to benchmark. And this is again another theme that people are saying don't ignore. It's the emerging market story.
You know, you really find if you sum up the actual quantity of things produced in emerging markets, so that the tubes of toothpaste, you've got as many tubes of toothpaste produced and consumed in emerging markets as in developed markets. But in emerging markets, they tend to sell them at a lower price point. And as all these companies that are selling toothpaste and every other consumer good that there is, and they move it up the scale in terms of making it a little bit fancier, you get more and more margin coming from these people. Plus, all these people want this because they haven't had it before. They see it on TV, they want it. I have a great picture driving to the airport in Nigeria of the roofs of houses, okay? And every roof in the house has a satellite dish and a little generator to run it, okay? And people see things, they want things, and they go out and they buy them. And the consumer is a very strong story across these markets.
And the second biggest theme is the industrial story from your fund's perspective.
Someone has to manufacture all those goods that you're going to sell to those people. So we like the people that sell them, but we also like the people that manufacture them, and we think that's very important.
Just some other themes that I know African-focused investors do look at: infrastructure and then agricultural land.
Yes,
infrastructure. What are your thoughts on that?
We like infrastructure a lot, and you will see that in our African fund we have things like the cement producers in there. Agricultural land, we like it. A little bit more difficult for us to get direct exposure. We have, for instance, some exposure to a company in Zambia called Zambeef, which is a very good company, and they're busy expanding into Nigeria. But a lot of the agricultural land is not publicly listed equity, so we aren't always able to get as much exposure as we would like. But you're right, Africa is going to feed the world. I mean, if you just look, 60% of the world's undeveloped farmland is in Africa. So
and food scarcity is a global theme coming fast and furious down the line.
Exactly, food scarcity, but also the change in people's eating habits. Because as people get richer, they eat more beef. That means you need more corn to feed the beef. So there's a whole change. So yes, more mouths to feed, and their eating habits are changing as well.
Do you think that, I see here your exposure, certainly in the Frontier Fund, is very limited? You don't actually classify agriculture in the emerging market space?
MSCI doesn't classify agriculture, so we can't really classify it if they don't as such. But it is limited because we don't have that much access to agricultural companies. But we do look, and there are some interesting ones, and we are in one or two. And wherever we find opportunities, we will go into.
Do you think that this is a high growth, when we chat 2 years down the line, do you think that, first of all, MSCI would have started to categorize agriculture? Do you think it'll be on the radar screen?
I don't think they'll split up that because, you know, they're using international classifications across the whole world. So I don't think they will specifically categorize it, but I think that you will see a lot more investments. You'll see a lot more ability for people to invest in agriculture, and not just directly into agriculture, but into things like fertilizer companies, and maybe companies also selling agricultural implements and adding value to foodstuffs as well. You'll see.
So the universe will actually expand,
will get
and
bigger
it'll be
as
all
well.
related industries into agriculture.